Kia ora, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news the US is frustrated with Iran and is promising even more military strikes. The deal Trump thought was close isn't. The escalation threat has oil and financial markets reacting badly. But first today, American CPI inflation jumped from 3.8% in April to 4.2% in May, largely as expected and largely based on higher fuel costs. This is the highest since April 2023. Today's geopolitical events and market reactions probably mean it isn't finished with the current trajectory. Actually, for March, April and now May, the CPI index rose 2% in just those 3 months. So the rate being experienced by consumers, annualised at 8%, is very much higher than the annual one reported. The White House reaction was very unexpected. Trump said, quote, I love the inflation, unquote. Certainly financial markets were unimpressed. There was a large jump in American mortgage applications last week, even though benchmark home loan interest rates stayed elevated at about 6.6%. After 6 weeks of holding back, it seems borrowers are coming to accept that they have to pay these higher rates. Remember, pre-war, these rates were under 6.1%. The jump in applications this week were from both new borrowers and those needing refinance. And for a 7th straight week, and including stocks in their strategic reserve, American crude oil stocks dropped in the latest update and by almost double the rate expected. Today's US Treasury 10-year bond auction was well supported and yields rose only modestly for this one, coming in at 4.48%, up from 4.41% at the prior equivalent event a month ago. In Canada, their central bank kept its policy rate unchanged at 2.25% as expected, and for the 5th consecutive time. They had inflation at 2.8% in April, so far there's little evidence higher energy prices are being passed on or embedded in their consumer cost base. Data out in Japan yesterday shows their May producer prices rose 6.3% from a year ago, up from 5.3% in April, and their fastest rise since the end of the pandemic in March 2023. After the April spurt, they rose another 0.9% in May alone. And China's CPI inflation level was low and stable in May, coming in at 1.2% from a year ago, unchanged from April. Beef prices were up 4.2%, however, and lamb prices were up 6.2%. Egg prices were up 6.6% on the same basis and a 5-year high. These were more than offset, though, by a 16% drop in Chinese pork prices. And dairy prices fell 1.2% on the same year-ago basis. But China's producer prices are not so calm. In fact, they rose an outsized 5.8% in May from a year ago for industrial products, up 3.9% overall when you broaden the categories to include food, clothing and other goods produced for consumers. Apart from the pandemic, the headline 3.9% is the highest they've had since August 2018. In Australia, we should note that their emergency petrol tax concession will end at the end of June. And that will juice up their inflation if it isn't extended. The US Treasury 10-year yield is now just on 4.54%, up 1 basis point for the day. And the price of gold will start today down another $160 from yesterday at $4,098 an ounce. Silver's down 50 cents at $64.50 an ounce. And oil prices are up $3 from yesterday at just under $91.50 a barrel in the US, while the international Brent price is now just on $94.50 a barrel. Hormuz transits are almost non-existent today, only 2 in the past 24 hours. And the Kiwi dollar is down 10 basis points from yesterday at 58.1 US cents. Against the Aussie, we're up 10 basis points at 82.9 Australian cents. Against the euro, we're down 10 basis points at 50.3 euro cents. That all means our trade-weighted index starts today at just over 61.8, which is down 10 basis points from yesterday. And the Bitcoin price starts today at just on $61,781 and little change from this time yesterday. Volatility over the past 24 hours has been modest, just on plus or minus 1.7%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.